The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We got the S&P. It's up 8 points right now on the day. It just keeps pushing up on that high. Really can't figure out what it's going to do and having a hard time breaking through there. We got the Russell up 6.4. We got the Nasdaq up 11.5. Right now, the Dow's up 54 points with oil up 79 cents on the day. Looking over at natural gas is up 0.042, and corn is up 12.25. Looking at soybeans, it's up 15.25. Euro dollar currently down 55 pips. Aussie dollar down 68. Pound dollar getting crushed, down 98 pips right now. We got the USD CAD up 73 with the USD franc up 82. Looking over the euro yen, it's up 42 pips on the day. Pound yen up 16 pips on the day. And dollar yen up 0.74. So the dollar is basically showing a lot of strength across the board, along with the market up, but not really up. When you look at the the intraday moves and everything else. And we were looking at some different things over on Nadex. We put an order in, shortening it when it was up at the high. We're gonna have to move down possibly to about 1650. And so we got that order in right there. You can even see that take profit pending right there to buy back. So if we're going to buy at 1650, that means we're putting a bid out there at 1650. So you can see our bid order in the market right there. This is a Nadex ticket. And we're trading with absolutely capped and limited risk. We sold at 1653.8. So what does that mean if you sell at 1653.8? And what I can do is I can bring up a calculator, show you how the math works. It's really simple. You don't have to do all the math. It does it for you in the scanner and even in the Nadex ticket. But I just want to let you know this is how it works. I cannot lose any additional money above 1655. My risk is completely capped. And if I sold at 1653.8, my risk is 1.2. So a very, very small risk on that. Again, that's 1655. That's the ceiling. Okay, that's the top of the spread. When I say spread, what do I mean? I mean the difference between the floor and the ceiling. So if the floor is 1625, the spread is 1655. The difference between 1655 and 1625 is 30.0. Okay? So we got 1655.0 is the floor. It's the ceiling. So that's the top of the spread. We sold it, so our risk is capped. By the way, we don't get stopped out. The market goes above that price, we're still in the trade. We don't have to get out, and we have time to be right. Right now, we're basically at break even. So we can go in there minus 1655, and we subtract that from, what do we sell? 1653.8, okay? So 1.2. What does that mean? Well, every decimal, that last digit there, is a tick. So it ticks in whatever the last digit is. When I say tick, you may not be familiar with that, but you are, you just don't know it. So stocks tick in what? Pennies, okay? Tick, pip, whatever you call it, minimum increment move, okay? So the minimum move is the last digit on every spread. You don't have to worry about quarters and eighths of cents and everything else. Everything is always an increment of 1, whether it be 1, like the Dow, or 0.1, like gold, or, 0.01, so like the US yen, or 0.001, like natural gas, or 0.0001, like euro dollar. They always are going to tick in an increment of 1 on Nadex, which makes it so much easier. And not only that, but you don't have to worry about what does it mean with currency conversion and what's the value of the tick, and all ticks, all minimum increment moves. Every time it moves 1, that is a value of $1. So 1.2, if it's increment of 0.1, is 12. That's it, okay? So 12. Well, if it's 12 ticks of risk, every tick is $1, so that's $12 of risk. And we did 5 of them. $60. We basically put on a trade for a 1-point risk on the S&P 500, saying that we thought it was going to drop by the close of the day. 1 point. I mean, come on. You could easily put a 1 point stop loss and get nailed on trading the S&P 500 futures. So this gives you the ability to, go in and do a trade, do a short trade. And yeah, does the market have to move down? Yes. Okay. But, usually the market has to move for you to make money, right? So we only have a $60 risk. And then what happens on this trade? Okay. What happens if we decide to buy it back at 1650? Well, if I sell at 1653.8, because I'm selling first and then buying back, it doesn't matter if you buy first and sell second or sell first and buy second. You just want your buy to be lower than your sell. You want your sell to be higher than your buy. So we're going to subtract that from 1650. That's going to give us 3.8. Well, let's divide that by 0.1. That's a $38 profit potential on that trade. Okay? And then, so again, we'll go in, do that for you one more time. We sold it 1653.8, and we bought it back at 1653.8. That's $38 per contract. We did 5 contracts. How much do we make if it gets down there? We make $190 on a $60 risk. That's over a 300% return on our trade if the S&P is able to move on down to 1650 and get us out of this spread. If it doesn't, we only lose $60. It's a very easy short trade, and we're not flipping out because the market's going against us. We're not like, oh, I hope I don't get stopped out. So very, very simple. And there are different ways to trade them. I don't just trade, these out-of-the-money, spreads where it has to move a lot. A lot of times I'll trade the at-the-market spreads too. So it's not the only way I trade. But it is one of the ways that I like to trade when I'm trading over on Nadex. And so let's see here. We'll pull this up. I'll give you an example, which actually see this box on the chart. By the way, I call them boxes because they look like a box if you graph them. Okay? So right here, we go in, and we go, okay, let's chart this thing. Let's put this thing on a chart and see what are we talking about. Okay? Well, 1655 is our ceiling. 1625 is our floor. So there's a lot of profit potential, by the way, in this trade. That's just if we took profit, at 1650. But 1655, pretty much where the market's at right now, okay? And we can make money all the way down to 1625. All right, so right there. A little bit there we go. All right, so right there. And the premium, it's still in our favor. It's at 1653.9, so it's actually even below the market right now. So we can put this trade on, and it's just a very, very cool thing because right now it's just oscillating. It's been oscillating here really since we put the order on, and it dropped a little bit on us. But let's look at it and check it out. We put it on this morning during the bull bear binary hour, somewhere around 9:30 or so, and let's see. So let's just say we put it on right there, bring it up to 1655. So it's went sort of in our favor, against us, in our favor, against us. It's just oscillating. Not doing a whole lot right now. And we can make money again on this trade. This is really important to get. We can make money all the way down, okay? All the way down if we wanted to. Now, this is if you're going to babysit it, okay? Now, you may just put it on and go back to work. But we can make money all the way down to 1625. It kept going below 1625. Do we lose? No. We just had max profit, okay? So it's not that you stop making money, you stop making additional money. It's not that you don't make money, you don't make any additional money. So if we go in here and go, okay, I'm going to sell at 1653.8, and I'm going to subtract that from the floor, 1625. That's 28.8. That's 288 ticks times 5. What is my profit potential in this trade if the market just crashed down? I don't expect it to. That's why we have a take profit set in there at 1650. But what if it did crash down? How much money could be made? What is the profit potential on this trade? Well, I'm risking 60 to make a potential $1,440 on the trade. And so, that's obviously insane. So 1440 divided by 60. So that's a 24 reward to risk ratio, or 1 in 24, risk reward, however you want to put it. But basically means I have the potential to make up to 25 times my initial investment on the trade. And what kind of leverage am I getting? All right, let's look at that. So the S&P is trading at 1565, okay? And if we go in there, 1655. So we go in there and we put in times 50. That's worth $82,750. That's what the value of one S&P E-mini futures contract is. So what does that mean my leverage is? Okay, this is my reward to risk ratio, 1 in 1,140. But what is my leverage. Because one of the things I always talk about is you need time to be right. You got till 4:15. Okay. You need capped risk. We can't lose more than $60 no matter how far the market moves against us, and we can't be stopped out. So that defined our risk, limited our risk, and you need to leverage your money. Okay? So how effectively are we leveraging it? Well, if I'm controlling 82,000, it's right here, $82,750 with $60, that is 1,379 to 1 leverage. Not 50 to 1, 1,379 to 1. And we still, I mean, you get really good leverage over in the futures market too. So not that good. But you do get good leverage over in the futures market. You can go over there and 82,750. You know, most brokers you can put up, say, you know, depending upon your broker, let's just say $500. So that's 165 to 1. Still not near as good. Some brokers you go 82,750 and they'll make you put up, say, like 1250 on an S&P. That's 66 to 1. So that's still better than FX. So now if you hold it overnight, of course, you're going to have to pay more. So I don't know what it is right now. I don't really hold overnight anymore. But 4,200, so it'd be like 20 to 1 if you're holding overnight. But we're getting 1,300. So again, 82,750 divided by $60. 1,379 to 1 leverage. And that's leverage that doesn't cut both ways. Okay? That's not just leverage of, wow, you're taking insane risk. It's leverage that is basically giving me buying power up front without putting me at this massive risk of losing a ton of money right here. And so, I mean, 1 point stop loss. Well, think about it. We put this thing on around 9:30 or so. The market's already went up to 1659.25. Well, if we put it on at 9:30 when the market was at 1655, I mean, that right there that's 4 points. That's $200 of a stop loss that we had to have on, and a greater than $200 stop loss to even stay in this trade so far. Plus the $500 margin, so you would have to put up at least $700 just to stay in the trade. And, of course, you got to figure out where you're actually going to put that stop because the thing could just fly to the moon. So, you know, considering all that, looking at all that, going, wow, okay, that's massive leverage. It's a small risk. I can't be stopped out on this trade. If I'm wrong, I lose a point. Well, you know what? Unless you had a 3-point stop loss, you lost 3 points on the S&P E-mini futures. So, not a bad deal. And again, that's fading. That's going against the market. That's being that contrarian trader that so many of us like to be. And so if I'm not going with my market trend, now if I'm on my market trend, I'm using at the market spreads, and the leverage, you know, won't be as high. Okay, but you know, if I'm going contrarian, I'm usually going to go out of the. I'm expecting, you know, a decent move if I'm going to make it worth having that kind of opinion. So we'll talk about a few more things when we get back. Stay tuned. We'll be right back after this break.
Says you can't take it with you. TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just got through going through some examples for you of how this works and how you get this massive leverage and how you have defined risk. And, hopefully you're starting to get the idea. If you are, if you're wanting to get more of an idea, okay, then the next step for you, literally right now, is to hop on over to TFNN's website. Click on the Nadex banner. Once you click on that, then go over here and just get a demo account under our products. Then click on demo. Fill in your username, first name, last name, phone number, and email. Click apply for demo. In about 15 seconds, you'll have a password where you can log in and you can start placing trades. Then open a live account. And you can start with a minimum funding of $100. Okay? But if you open a live account, you can get that demo extended. If you want to know how to make that happen, email me. dmartin@tfnn.com, right over here on the TFNN homepage under contributors. So right, where are we at? See, radio, contributors. So right there is contributors. And you can go down and find my email, my name, everybody's email, everybody's name, all that stuff, for all the different shows that happen each week. Now, once you do that, then log in and you can get started. Now, you're probably going to want some education to go along with it. So basic education, show you one place, youtube.com/Nadex. check out their playlist, like their application playlist and different things like that they have. But the big thing, okay, to make this easy, which is what you want to do, to make it easy, go over here to tfnn.com. Go to Home. Right down here on the left side, you see Diagnostic Box Spread Analyzer. Click on it, and then fill in the information right here. You get a 2-week free trial. You can check out the Spread Analyzer. Literally just launched yesterday, just launched the binary scanner also. So we have a spread scanner now, but we also have a binary scanner. So you're getting access to that for free right now. We're going to let you access it at no additional charge. So get in there, get a hold of it, check it out. We have tutorials on binaries. We have tutorials on the spreads that I'm talking about all the time. And, of course, you get the deviation levels I go through every day. On top of that, I also give you access to the scanners. So there's a lot of stuff you get access to get you going. And the markets are just a whole new animal. And so this is a very revolutionary way to trade in the middle of these markets to help you define your risk, maximize your leverage, give you time to be right, and not trade in fear from everything that's happening. Now, one of the things I get a question on a lot of times, and I went over this morning, I figured it's worth going over again, is people will come in, they'll go, well, how are these things really priced? They use a Black-Scholes model, okay? That's it. So it's very simple. So talking about the spreads here, and just to show you the similarity, all right, in pricing. So we're going to go over here and get rid of a few of these and pull this up. And let's go, okay, well, how much money would I have to place to, put this spread on? So, well, one of them right here, 16, if I'm going to sell, 1654.4, and then minus 1655. Okay? So right there, it's very small risk. So 0.6, which is $6, and then let's say I did 5. I need to do 5 to equal 1 S&P E-mini. Okay? Now, what if I want to go over and place the same trade on the CME? Can you do that? Yeah. On Fridays. Nadex has spreads every 2 hours, and they have them every day. So 23 hours long, and they have them, all these other times too. But right here, every 2 hours, we check this out. Look at this, $1.35, $1.50. Okay, so $1.50 to buy a 1655. We're looking at a different one than we were this morning. The 1655 spread. So what's that gonna cost you? Well, you have to do 50 of them. Okay, so 1.5 right there, and then times 50. You gotta do 50 of them because it's one per. So they actually, because it's a 50th, the price. So they make you do 50 contracts. So on Nadex, I can do this trade right now. I can buy a put, a 16. I mean, that's really how you could look at it, is a 1655 put. Okay? I can go in, and I can buy this put for $30 if I buy 5 of them. Okay? And which would equal 1 E-mini future option. That is 1655 strike, a put. So that's for $75. And I don't know if you get the power of that, but it's absolutely massive. And it's just the way they're priced. That's excellent. That's cheaper. It's less risk. You don't have to worry about being assigned a future contract. So there's a lot of benefits there. All right, let's stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So I'm just going through and looking at, different prices and just sort of showing you how well they are priced. So they're very close, maybe a little above, maybe a little below, compared to just S&P E-mini future options. So you can go in there and you can take advantage of them. Right now we got a $1.30, so we can look at it. So $1.30 right now on these. So let's do the math on that. 1.3 times 50, and this will fluctuate, okay? And we go over here, we got, if I'm selling this, 16.55 minus 16.54. 16.55 minus 16.54 current market price. And that's going to be 1.0, which is 10. So if I go in there 10 times 5, that's 50 by 65. Okay? So I can sell it on Nadex for 50, or I can sell it on CME futures for 65. Exact same contract. Okay? I mean, yeah, there's a cap. Okay, this thing can only make money down to 16.25. But I think we're going to be okay with that one. So, anyways, I hope you're getting it. I hope you're putting it together. And let's check out a few of the markets, see what all is going on. So right on over here, we got the S&P, and it's moved up to about its 0.7 deviation level. Keeps holding right at that level. We're really holding at that 1660 point over here. And it's just been hugging it really tight. If we go on in, we can look a little bit further. We'll check out the other indexes. Let's go check out the NASDAQ. So over here on the NASDAQ, I mean, it had a spike right there. Just a nice spike on up. Hit that 0.7. bounced between 0.5, 0.7 the entire time, and just hanging out at 0.5 the entire day. So just a normal Friday. And looking on over at the Dow. On the Dow right here, we got a movement up to half a deviation. Didn't quite hit the 0.7. Did reach for it, but it's also sitting just really flat at the movement. So we might see a little movement at the end of the day. We'll see. And then going on over and checking out the Russell. So what do we got in the Russell right now? On the Russell, it moved on up. Same thing, 0.7 to 0.5. All the indices sort of mirroring each other at the moment. And let's check out our metals. We got gold moving on down perfectly. We were talking about this on the air. This was actually on the air. It's right at one deviation. Just a big move down in gold. Just staying down there, and it's been hanging out pretty much ever since. And we go on in here. Let's check out a couple other markets. We can look at copper. So see what copper's doing. Copper's moving on up to 0.7, and then just doing a half deviation day. Gold acting perfectly on the day. And a Friday down day, so it's a pretty strong move right there. And then looking over at silver, it almost was like gold. It moved down to that one deviation. I mean, just a few ticks off, but decided to pull on back more than gold has. But we had, again, a nice target on silver right there. And we check out our energies. We got oil. Oil moved on up, hit one deviation, almost broke 1.5, pulled all the way back to settlement, which is a very powerful line, okay? And in this case, after it hit one deviation, did not have the strength to really break through that settlement. It hit it and closed below it, and then flipped around, went on back up, almost back up to one deviation now on the day. And if we look a little deeper, we can see right here that it actually closed right there at 95.14, just a couple ticks below the deviation. Well, I always talk about the stop method. And so if you're looking at that stop, and I say, hey, whenever it breaks that stop, look for chop or look for reversal. And it did break that stop. So 5 ticks above there, breaks it, and moves on back in the other direction. Now let's check out natural gas. So right over here on natural gas, we got oh my goodness, that just happened. So we got a spike on up. It wasn't that big before, but look at that. Look at that massive move right there on natural gas. Moved up to 2 deviations just now, just flew up. And, I mean, fortunately, that was a nice uptrend on the day, but my goodness. So just a massive move right there. And, usually we're expecting a 1 to 3% move on natural gas, but that's a really, really big move. And, fortunately, I have, bear signals going all the way. But, yeah, wow. And just a very, very large move. And so definitely be tightening. Just take profits. Get out. If you're not out already, get out. By the way, you can trade natural gas on Nadex. Yeah. So you can trade products that move like this on Nadex. You should be afraid to trade products that move like this anywhere else. Because, I mean, if you were short, let's say you were bound, you're hey, that's a resistance level, whatever. I think it's just going to bounce right back down. I'm just going to play swing trades all day. And then that's faster than you can react. And let's go down. Let's drill down a little bit tighter. It'll go down to a minute and see just how fast did this thing move. Yeah, I mean, that was seconds. Okay, right there. I mean, it was just boom. And then the next minute, it started pulling back down. So really, that movement happened in less than 60 seconds. And if I drill down over here, I can actually see even faster. That's what these velocity bars are. All these yellow ones mean 0 second. So meaning it wasn't even clockable. How fast it was moving. It went, slowed down for a second, then boom, 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 boom. I mean, you can just see the massive move. And then one last final velocity stretch happening right there at the top. So, wow. Very, very cool move. And I hope some of you were able to take advantage of that. How would you have taken advantage of it if you were trading Nadex? Well, you'd go in and you'd find spreads or binaries over on the Nadex exchange. And you can try to find it in their platform, or you can go through and find it in the scanner. Makes it a lot easier. And you just go over and just choose the market. So right there, we go in, and we got natural gas. And so if you had a buy on the day, there's not going to be a whole lot show up right now, simply because everything has moved so much. You can go in. I mean, you talk 6 ticks, 5 ticks to break even. Not big, not a big deal at all. And but you can go in there and place those trades. I can show you if I get rid of all the filters. There was a lot of contracts you could have taken advantage of along the way, and with completely defined risk in that process. So, very, very cool way to trade. Now, what about binaries? What if you want to do binaries? Well, over here, you can also choose natural gas. And you'd actually be able to see on these markets We'll reset all the filters so you can see all of them. And you can go in. You can actually see the trades sitting right there and what trades exist on the upside and the downside of the market. And you can trade neutral strategies, premium collection strategies, directional strategies, volatile strategies, random walk strategies. So, what is random walk? Random walk means I don't care where you go, just go. Go up, go down, I don't care, just go. And then neutral is I really don't care what you do, just don't go too far. So random walk, you want it to move. Like up or down, you don't care, but you really want it to go far. Neutral, you don't really care if it stays flat. I mean, ideally flat, but it can move up, it can move down. You just don't want it to move up or down too far. Premium collection, one side, means I don't care if you go up, I don't care if you go flat, as long as you don't go down too much. Or I don't care if you go down, I don't care if you stay flat, I don't care if you go up, as long as you don't go up too much. So sort of a directional bias with some room and without any movement required. And so you can go in and, like, for instance, you could buy this right here for this 4020 for $77. This would be premium collection. So it's a higher risk trade. But right now, I'm just to let you know, I'm at 4020. The natural gas is at 4040. So if it stays above 4020 between now and expiration in 47 minutes, you would collect $20 in time premium. If it could go above, it goes up, you're fine. Stays flat, you're fine. Goes down, you're fine, so long as it expires at 4020. And now, now it's actually even more. You can make even more money. You can make $30, $32. So, and which is crazy considering it's going up. So the premium's really just flushing into it right now. And so you said that 4020 now, it's down $9. So that one went from 30 to 10, 9, 8. So you already made $20. You can get out. You don't have to hold it till expiration, okay? So if it moves a little bit in your favor, you can take out. If I've made 60, 70, 80% of the profit, I can scram. I can take it and move on and be happy and collect my profits. And sometimes it can be a little easier because it'll move really fast, as you can see. And one of the things I did, too, is I added in this really cool feature. We barely even got into I didn't even go over this morning when I was with Tommy on the air. But I added in a feature for what would something make if it moved? And this is really interesting. So if you're trading, let's say, an out of the money, okay, you can actually see there is a yield curve. Look at this. So 8 to 1, 7.62. At this point, same risk on the trade, but your reward to risk on the movement, if it moved up to this price, is very, very small. So you're only going to get 3 to 1. This one you're going to get, an 8 to 1. So you get 7 to 1. So 6 to 1. So I can look at all these and go, you know what, probably the best one for my money is probably this $10 one. For $1 more, I'm getting about the same reward to risk ratio as the two above it, but I'm closer, so less movement's required for it to be profitable at the end of the day. My risk is really low, almost equal, and this one up here is the absolute worst choice. So simply as far as out of the money goes, like there's no reason to spend $9 on this one when I can spend $9 on this one, $10 on this one, $10 on this one, and they all have a better reward to risk ratio that gets up to that price. So it's really interesting just watching and seeing that yield curve and how it can really pay off for you. And I can go over here. You can do the same thing, say on the S&P. So what if the S&P was to move up to 1664? What would happen? And so I can go over here and actually see where is that yield curve right here. Look at this, 3.9. So $23.44, 23 to 1 reward to risk ratio. If it just moves up to 1664, I will make more money than I will on these other ones. So it's just it's really interesting seeing how it works, putting it together, and going, what would be my profit? And I can move it even just a little bit higher. Watch this. Put it right at break even, 1664.6, and now I'm making $44. Okay, because it's going to be worth $50. So if I spent like $5, then I'll make $45 if I got out right when I hit 1664. But I can see this yield curve and go, wow, that's the one that's my money trade. So if I'm going directional. Now, if I'm going the opposite direction, let's say I'm just trying to collect some easy money, then I might look for the invert of that, the inverted reward to risk ratio. Okay? So, where can I see that I would make money in the opposite direction? And is there any kind of curve I can see that would actually give me a better payoff on, maybe buying and in the money? So I might find that, one pays off better than the other. There's no reason to do a certain one. And but anyway, seeing that, it lets you just immediately know that that is not the best trade. So one more dollar, and I get a much, much better yield on the exact same move. And so this is a cool thing we added in. It basically is calculating what's the impact on the binary price if the market moves this far fast. Okay? So, before a news report, different things like that. So you sort of put what is your estimated, where do you think you'd want to take profit? And so the way that I'm working on using this, the sort of the new method is, like I said, we just got it released, is I'm going, okay, if I'm going to go trade spreads, all right, and which I love trading spread straddles on news because a lot of times you can break even or profit on the trade. But I can go, what would be my profit target? So I go through that, and I'm like, okay, well, that's where I'd be getting out on the spread. And I can go over here, and I can put in that upside profit target and go, what actually would be the best binary for me to buy if it hit that price? And boom, I'm going to see the yield curve right there, the reward-risk ratio, and know which one's going to give me the best bang for my buck on that trade. And a lot of times I'm doing them on currency. Well, in currency, there's a lot of binaries, so you can really go in there. So if you're like, if I thought that the yen was going to move up to 103.16, then I can go over here and I can see, all right, the best trade actually is going to be this $7 trade. So if it moves up to 103.16, I'm going to make 72 bucks on that. So, that's fantastic, okay? So $72 on an $8 risk. And this is really just a whole different way to take it to another level to trade the binaries. And so, hope you're, picking this up. And I hope it's stimulating some thought for you. But if it is, then, you're going to start to love these products. And you'll see the true benefit in the scanner. The scanner does not tell you what to buy, when to buy, okay? What it does, it helps you find the best spread, the best binary to buy for your trading decision. And instead of you having to go in and manually do math, look at all these things. Okay, there are a ton of, and this is just at the end of the day on a Friday. Okay, just wait till you see this thing on a Monday, at, I don't know, let's say if we're looking at Monday at 6 o'clock. This thing's going to be loaded with, over 100 binary strikes. And how do you narrow that down? I go, you know what, I don't want to risk more than 20 bucks. And it's going to instantly, look at my list, it's got a lot smaller. And I say I want my reward to risk ratio to be, 1. So, and it'll make it even smaller. And so we're going to keep adding in more and more pieces. I can go over here on my simulation risk. I want it to be, 1. Boom. Now we have a small list. Okay. And so these are my only choices. Which one out of the two available expiration times, the 2 o'clock and 3 o'clock, which one's going to be my best trade? So I have a $4 risk trade right here. Now it is going to expire in 10 minutes. So I got to obviously take that into account, but it has a 9-to-1 risk reward. I got a $6 risk trade that has a 10-to-1. So I'm actually better off, based on that move, to choose the closer one. I get a better return on my money. So we go down here, same thing. I can find even better reward-risk ratios, but I find that the closer it gets, the faster it moves. Stay right there, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. And checking things out over here and looking at them and just sort of seeing what do we got that we can take advantage of. And one of the things I want to show you is this binary scanner and just how you can use it to find the better trade and based on your expected move. So what's your target? And if you'll have a target in mind, you go, what would I make if it moved this far? And to my surprise, when I look at some of this stuff, and this is on a fast expected move, okay? But I put in like 103.16 over here on USD yen. And you'd think the 103.16 strike would be your best strike. But actually, on a speed of movement basis, you'd actually make more money on the 103.20. You'd buy it for $9, be able to make a $28 profit on the trade. This one you'd buy it for $17.50, be able to make a $27 profit. That sounds larger, but it really isn't, because it's the making 22 on 9 is a 2.4 reward to risk ratio. Making 27 on 18 is a 1.4 to 1 risk reward ratio. And you're not only putting up less money, but you're making more money for your money. So combining those two things together, and it's sometimes you even see inverted strikes and prices and everything else, and putting all the pieces together. But and this is an interesting one right here. I don't think if I've seen this before, but I'm trying to pull it up and see how accurate that is. But so right there, so yeah, we got that at $9. And what is this one pricing at? See if it's still pricing up there. Yeah, so look at that. That's sort of messed up. Might even be some sort of arbitrage thing. But looking at that, look at that. It's actually costing more when it's money. So that's very interesting. You don't see that very often at all. But it's an inverted quote. And usually you would see it, cheaper. So right there. And but I don't think I've ever seen that. But you know what? I wasn't using the scanner before. I didn't see things like this. You could actually go in accidentally, and you could pick. I mean, that's one tick higher. I mean, it still shouldn't cost more. It should be actually cheaper if it's one tick higher. So that's actually a mess up, I guess, in the pricing, which is good. So I like mess ups in the pricing. But it also lets me know I could have bought that 103.21, which probably is like on a 2-hour or a daily or a weekly time frame. I could have bought that one, not knowing that I was giving up a tick and giving up a couple dollars, and had no idea that it happened. So I would not see that if I was sitting inside the Nadex platform over here, and I was going over here and going, okay, USD yen, and I got the 1 to 3s expiring at 3 o'clock, okay? I got the dailies expiring at 3 o'clock, and I got the weeklies expiring at 3 o'clock. I got 3 of them expiring at 3 o'clock. What we're doing is we're putting all of the 3 o'clocks all together. If I get rid of the filters over here, reset them and bring that back, got to get that updated, and get this out. There we go. So we put everything back on. Look at this. This is all the 3 o'clock expirations. That's a lot of trades to try to comb through and find the best trade that you're looking for. And you probably never would have seen that inverted price had you just been simply putting in, scrolling through the different ones. And it'll usually fix itself. But right there, I mean, it's still inverted right there at 9.4 and 7.9. I don't know if that's somebody's order or what, but we can you can actually look at it. It's sort of cool. If you go over here to Nadex and we open up the tickets, and I love doing arbitrage and everything else, so I'm fascinated by this stuff. But yeah, I mean, that's direct market maker quote right there. So there's no second level even going on. And you can buy a lower one for cheaper. Now, there's really no arbitrage in that sense because the bid-ask spread alone destroys the arb. Now, if it was big enough to be larger than the bid-ask spread, then you definitely would have an arb. But sort of a cool feature. So I'm having fun. Just started playing with it today. Anyways, hop on there, check it out. I'll see you Monday. Bye.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.